There are a lot of people that are in their house right now, but they're scared to sell their house because there's nothing else on the market. Well, they don't have to. The main reason they want to get out of their house in the first place is because maybe there's enough space, maybe there's, a big yard and everything else, but the house is outdated, the house doesn't look right, the cabinets, everything, the kitchen's ugly, and they feel like they're stuck, but really they're not. You know that you can refinance your house using a Freddie Mac or a Fannie Mae home style renovation loan or an FHA 203k loan, and you can actually not come out of pocket for any cost, lock in a 30-year fixed rate, and get a contractor bid, get the appraisal done, and they will actually increase your loan amount to the size of your rehab. So you can do this while still getting a 30-year fixed rate that's not going to blow up your payment, but it can help pay for the cost of a renovation for your house. That way you don't have to move. And it's actually very easy to qualify, and you can get it done and get it started in as little as 2 weeks. The main things you got to do to get it started is, one, you got to go talk to a lender, okay, and you got to let them run your credit. You got to let them look at it and see what your debt to income ratio looks like. But once they do that, you get a contractor's bid. The contractor's got to lay out the materials and the labor costs for each item that's going to be done. You submit that back to the lender. The lender then goes and submits everything you have to underwriting. They'll go request an appraisal on the property. They'll get everything done in a matter of 30 days, just like if you bought a house. You can do this on a purchase as well. If you're buying a house and it needs work, but you don't have the cash to put up to get the work done, you can do a 203k loan or a home style purchase for Fannie and Freddie Mae, Fannie Mac and Freddie Mae, and you can still roll in the cost of the renovations into the 30-year fixed loan. Okay, so what they'll do is they'll get an appraisal done, just like on the refinance, for the after repair value of the home. After this work has been done, that's laid out in the contractor's bid, they'll say it's going to actually be worth this much now, and they'll lend up to 97% of this on Freddie Mac and Fannie Mae, and they'll lend up to actually technically 97.5% on FHA. So people are feeling stuck, like there's no other options because they can't find a house, and they're tired of their current house, but maybe they don't really want to sell. Maybe they just want to get the renovation done, and they don't feel like they have the cash flow to do that. There's a lot of ways you can get this done. Obviously, everyone thinks of hard money, and they think of all these scary options that involve you taking out a loan that's way higher interest rate that bumps your payment up $1,000 a month. Depending on the size of your renovation, if you're only spending $20,000 on a renovation, then obviously you don't want to be paying an extra $1,000 a month for it. You might as well just try to save up the $20,000 and pay cash for it. So a lot of those things don't make sense. But what we do a lot, I'm actually a loan officer, and what we do a lot with we deal with a lot of house moving projects. So what people do is they take these old Victorian style houses, these houses that are on pier and beam foundations that can actually be lifted and be moved across town to a lot that someone owns that they want to put a house on, and they want to have this beautiful classic style house on their lot. They don't know how to fund it. Okay, so the first thing that people do is they contact us, and they usually owe money on the lot. They may own it free and clear, but what they've got to do is they've got to have some kind of purchase money lien, right? And they'll get this house maybe from one of these house movers. The one we work with in Houston a lot is Cherry House Movers. They will actually be selling these houses that are otherwise going to be demoed. They'll buy the house from them. Cherry will finance it for them. And what we'll do is we'll actually structure it as a refinance. We'll pay off that Cherry house mortgage, and we'll accommodate the contractor's bid into the equation and get an after repair value from an appraisal. Submit this to the new lender, who's going to give them a 30-year fixed rate based on either Freddie Mac or Fannie Mae or FHA guidelines, and they'll then, once the loan is closed, they'll pay the renovation cost out in draws, just like you would with the normal construction loan, and you don't have to close again. You don't have to do anything else after the construction's done. They'll just take the 4 or 5 or 6 months or 12 months, however long to finish the rehab. Right, so you can do an extensive rehab. You can do slab, you can do electrical, you can do plumbing, you can do structural, you can do all those things, and those are in a FHA model, those are actually called a 203K standard, which includes items that need to be reviewed by engineers. You can do a limited remodel as well. If there's no structural items or there's no plumbing or electrical that needs to be done, you can get what's called a limited 203K, and it's actually a lot quicker and a lot easier to do. You don't have to have as much of the engineering stuff done from the lender's side point, which they do, and they'll get the contractor to do during the period. But also the builder's insurance and all that stuff can be quite less, and it's really simple to do either one of these. You can close them in 30 days, just like you would a purchase. So usually when you're quoting one of these home style renovation loans, it's probably about a quarter, maybe half a point higher interest rate, but you're on a 30-year fixed rate. You still can go and refinance lower, but right now with interest rates going up, I think you're still better locking that in than waiting a year and seeing where we're at with interest rates, because you could be at 6.5% or 7%. I think they'll tone it down before that though, because like you said, the economy is not going to just fall off the cliff. There's a lot of people here that are still working and still want to work, and that's what always keeps things going, is the people that are working, right? So interest rates will probably balance out somewhere between 5.5 and 6. Maybe they go up 6.5, but I think the Fed does something before that happens. So there's people worried about interest rates. There's people worried about buying a house, no inventory. It's going to take a few years for builders to catch on inventory, and that's the main thing right now, is that there's just no houses on the market. So this can definitely be a really good option for you if you're in your house. If you got decent credit, you don't need great credit to get this done. You can get it done conventionally with a 640 and a 620 on FHA. So you don't have to come out of pocket anything. You can lump the closing costs into the refinance, and they'll lend up to 97% of the renovation just by going out there, getting a contractor's bid, getting the appraisal done that shows the after repair value, and they'll lend up to 97% of that. I think it's a great program for a lot of people that are in their house, but maybe they're not happy with everything in their house, right? They love their house, they don't want to move, they don't want to go somewhere else, but there's things that need to be done, and they don't have the cash to do it. Right, so they're always looking at these other lenders that are, title lending places and things that are charging outrageous fees, when Freddie Mac and Fannie Mae will give you these loans on a 30-year fixed rate, and they're excellent rates, right? So they're federal guidelines. There's nothing you have to worry about with any of that stuff. They're gonna have to follow everything they did when you bought your house, and it'll let you get that money to get the renovation done. So check it out. Our lender is Imagination Financial. You can contact me. I'm a loan officer. My number is 346-397-0205. Call me. That's my cell phone number. I'm putting this on here so people can call me. You can also email me, csampson@imaginationfinancial.com, and get started today. Call a lender. If you know a lender, call them, talk to them. Don't be scared to go to a lender and talk to them about your situation. Let them check your credit. Everyone's always 1 foot in, 1 foot out. They want to do this. They talk to 5 different lenders, and they don't let any of them pull their credit. They're like, oh, I'm not really serious. Well, that's how they get put on the back burner. They get left behind, because what's the lender going to do? He doesn't know your situation. He has to know your debts. He has to check your credit, and it's not going to hurt your credit. Trust me. If that's the main thing stopping 90% of people. They don't go to a lender, and they don't know that they're actually a lot closer to qualifying than they think. They think they're a long way off, and they don't know what to do. Well, who's going to tell you what you need to do is the lender. They're going to know exactly what you need to do to qualify, exactly what you need to do to get the best rates, and how quickly you can get everything done. So go and talk to a lender and get this started today. It's a great option.